So, if you're a business owner in the UAE, you need to listen up. A huge digital shift is coming, and it's called mandatory e-invoicing. It's going to completely change how transactions are recorded across the country. Now, I know it sounds a little intimidating, but don't worry. In this explainer, we're going to break it all down for you step by step. Let's get right into it.
All right, here's what we're going to cover. First, what this mandate actually is. Then, the big one. Does it apply to you? We'll look at your timeline for getting compliant, how to find the right partner to help, and finally, what happens if you don't comply. By the end of this, you'll have a super clear roadmap. First things first, let's be clear, this is the real deal. It's an official, nationwide system coming directly from the Ministry of Finance. This isn't some optional tech upgrade. It's a fundamental change in how the government tracks business transactions for tax compliance.
So, what do they mean by an electronic invoice? And this is probably the most important definition to understand. We're not just talking about emailing a PDF. The key phrase here is structured electronic format. It means the invoice is basically a data file, designed so that computers can read and process it instantly with zero human input.
And why the big change? Well, the goal is pretty straightforward: to create one single, digital, and standardized system for the whole country. It makes sure all invoices and credit notes are handled the same way, creating this smooth, transparent flow of information. It's a huge step toward digitization and helps the government for sure, but it can also be a game changer for businesses. Think faster payments, fewer human errors, and a much clearer view of your finances. Which brings us to the million-dollar question for every single person watching. Does this new system actually apply to your business? Let's figure that out.
Okay, the starting point is pretty simple. The rule of thumb is, if you do business in the UAE, you're in. The law is written very broadly. So the real question isn't, am I in, but rather, do I qualify for one of the very specific exemptions?
So who gets a pass for now? The list of exclusions is very specific. It mainly deals with some government activities, the airline industry for passengers, and for a limited time for goods, and certain financial services that already have a special VAT status. If your business isn't on this list, it's pretty safe to assume you need to comply.
And here's another really important distinction. Right now, this system is all about business-to-business or B2B transactions. If your company only sells directly to individual customers, that's B2C, then you are not part of this initial rollout. Now, that could definitely change in the future, but for now, that's a key detail.
Okay, so you've figured out you're in. The next obvious question is when? The good news is they're not flipping a switch overnight. It's a phased rollout, and where you fall depends entirely on your company's revenue. Here are the key dates to circle on your calendar. Things kick off with a pilot program in July 2026, but the mandatory deadlines start in 2027. Phase 1 is January 1st, Phase 2 is July 1st, and government bodies get their own deadline in October. The most important thing for you is to know which phase you're in.
And here is the magic number for Phase 1. If your business's annual revenue is 50 million dirhams or more, you're in the first wave. Your deadline for being fully compliant is January 1st, 2027. And trust me, that's not as far away as it sounds.
Now, if your annual revenue is less than 50 million dirhams, you fall into Phase 2. Your deadline is July 1st, 2027. This gives smaller businesses a bit more breathing room to get ready, but the requirement itself is exactly the same. All right, so we've covered the what, the who, and the when. Now we need to talk about the how. And here's a critical piece of information. You can't just build this system yourself. You have to work with a specific type of partner. And that brings us to this new term you'll be hearing a lot: accredited service provider. These are not just any old software companies. These are organizations that have been officially vetted, tested, and approved by the Ministry of Finance. They're the certified experts. And let me be perfectly clear, using one of these providers is mandatory. It's not a suggestion. And this applies to both sides of the transaction. The business sending the invoice and the business receiving it both need to be connected through an accredited provider. It's a two-way street. So what does this provider actually do for you? Well, think of them as your technical gateway to the new system. They handle the secure sending and receiving of your e-invoices. They make sure everything complies with a global standard called PEPL, which is just a fancy way of saying they make sure all the different systems can talk to each other. And they connect you directly to the national system to report the necessary data to the Federal Tax Authority. We've gone over all the rules. Now for the part nobody likes to talk about, but everybody needs to know. What happens if you don't follow them? The government has been very upfront about the consequences.
Yeah, this isn't a suggestion, it's written right into the law. This quote from the actual cabinet decision says it all. There is a specific table of penalties, and they will be imposed for violations. No ambiguity there.
And these penalties can add up fast. Just take a look. If you fail to implement the system by your deadline, that's a 5,000 dirham fine every single month you're late. If you fail to issue a single e-invoice when you're supposed to, that's 100 dirhams per invoice. And even something like not reporting a system glitch can cost you 1,000 dirhams a day. The financial risk of doing nothing is pretty significant.
So what should you do right now? Here's a simple 4-step action plan. 1. Figure out your revenue to know if you're phase 1 or phase 2. 2. Put that deadline in your calendar in big, bold letters. 3. Keep an eye on the Ministry of Finance website. They're the ones who will publish the official list of accredited service providers. And 4. Start talking to your IT and finance teams now to begin planning for the integration.
Look, this transition is a big deal, but it is absolutely manageable if you start preparing now. This move to e-invoicing is creating a new standard for business in the UAE, one that's more efficient and more transparent. So the only real question left is your business ready for it?